So again, I am Bob Iacchino, and this is why you stop loss and take profit orders. There's something that I've always wanted to explain to people about stop loss and take profit orders, and specifically about stop loss orders. Essentially, stop loss orders are viewed as something extremely negative. And that's what we need to change. We need to change your views around stop loss orders. Now, obviously, take profit orders are positive. Everybody loves to take profits. But when a stop loss gets elected or filled, the professional term is elected, you should try your best not to view these moments as failures, but rather proof or a testament to your own discipline as an active investor or trader. Remember, the most successful traders don't gripe or complain or even overanalyze their stop losses. They celebrate them as sort of guardians, preservation of your capital in this sort of relentless ebb and flow of prices. It's not the absence of losses that defines success, but the management of losses. That's what's going to make you a successful trader. And there's actually evidence of this, but we can talk about that later. So when your stop loss triggers, don't curse the market because you've not just preserved capital, you've reinforced the mental separations that separate the successful traders from the unsuccessful, the gambler from the successful trader or the strategist. So I just wanted to give you that sort of little overview of stop losses before we get started again into the meat of the conversation here. So why use stop loss and take profit orders? What are we going to talk about? Well, we're going to discuss risk management in futures and why it's important. We're going to talk about what stop losses and take profit orders are. We're going to give you an example of managing risk with a stop loss and take profit orders, trading gold futures. And we're going to look at stop losses on the Plus500 Futures platform, the mobile app, as well as the web app. And we're going to do the same thing for the take profit orders. And we're going to explain why stop loss and take profit orders are essential. And then we're going to throw some practical tips for using stop loss and take profit orders. So hope you guys are ready for this because, again, for some people, this type of a subject is a little boring. But I promise you, as somebody who's been doing this for coming up on 31 years now, it's essential. Okay. And one is not more important than the other. It's essential to have both, in my view. So, why are we discussing risk management in futures? Well, futures trading allows really high leverage. I always word this as the futures markets treats you like an adult. So it allows high leverage, and when used correctly, potential reward increases, but so does potential risk. Managing risk is critical to ensuring long-term success and portfolio stability. So one is not more important than the other here. One of my stupid overused cliches is the best way to be a trader over the long term is to trade for a long time. And that is the key of that little phrase is managing risk. And then portfolio stability is almost as important on the profit side as it is on the loss side, because the profit side being stable helps you manage your psychology. Traders who use stop loss and take profit show improved performance and longevity. There's actually studies done about this, and you can find those studies. This is not something we're making up. They can also reduce emotional decision-making during volatile market conditions. Sitting there and wondering, should I get out of this? Is it going to come back? Is something you need to take out of your process as much as you possibly can. Now, there are going to be times where you get stopped out and it goes back in the other direction. But again, you need to look at that as like, okay, this particular trade goes in my ledger as a loss exactly at the area where I wanted to take a loss if it went there. And I'm going to go ahead and improve my process, but not change my process because of this one trade. That's the key to it all. So what is a stop loss order? For those of you that don't know, it's a preset level to close your trade automatically to limit losses. In the phrase stop loss is the word loss. You're stopping losses. That's the point of it. Set a stop loss at $500 below your entry point to cap potential losses. This is an example of that on a line graph. Okay, so you can see here, there's this graph of just some fictional price movement. Say you did a buy entry here and you set your stop loss here. It goes through, you're out, you lost the $500 that you assumed was possible when you put the trade on. Okay. Same thing on the right here with the take profit, a preset level to close your trade automatically to lock in profits. That's what a take profit order is. So in this particular line graph example, you put on a long trade down here, it rallied up to your take profit, you exit the trade, you secured your gains. Now that goes into your ledger and you could start to analyze your process. I always look at this, your trade ledger with your stops and losses in there, as the recipe to the trading you're doing. If you need to make adjustments, you need the recipe to be consistent. So in other words, if you're a chef, and I don't know, let's say you have a recipe for lasagna, since I'm an Italian guy, and you're doing your lasagna and you're like, yeah, something tastes wrong. You go back to your recipe and say, okay, what do I need to adjust here to get the flavor I want? That doesn't mean you try to adjust losses out of the situation. It just means you can adjust your process to maybe get a little bit higher take profit orders, a little bit lower on the loss side, maybe fewer trades, maybe more trades, but without being consistent, you can't properly adjust it. So let's look at a simple example. And again, it's a fictional example of managing risk through trading gold futures. Okay. So let's say the scenario is that you have an entry price of $19.50 per ounce. Your stop loss is $19.40, which would be a $500 loss on a single contract. And your take profit is $19.70, which would be a $1,000 gain on a single contract. Potential outcomes: price drop. If gold hits $19.40, the stop loss triggers, helping to limit your loss to somewhere around $500. Understanding that there can be slippage. By the way, there can also be positive slippage in certain scenarios. In other words, you don't want to lose more than $500. It triggers your pricing goes up, and by the time the rapid fire computer starts, it may be $499, could be $498, could be $501. You need to be aware of that. But you know that you're getting stability on your losses right around this area. Price rises. This is the other outcome or other potential outcome in this fictional scenario. If gold rises to $19.70, the take profit triggers, helping to secure your $1,000 profit. Now, a lot of people would say, why would I use a take profit? Why would I set that or preset that? Well, a couple of reasons could be you're walking away from your computer for whatever reason, okay? Or you don't trust yourself to not feel bad about the excess profit you may theoretically leave on the table. One of the phrases I hate the most that active traders use, and they use it a lot, they say, I made $1,000, but I left $250 on the table. The assumption that you're going to sell the high every single time you put on a long trade or buy back the low every single time you put on a short trade, it's a fallacy, it's a myth, and it again screws with your psychology. So you need to avoid that as much as you possibly can. Let's take a look at how stop losses work on the Plus500 Futures platform, or where they're available to you. What we're talking about here is the automated function in the platform. So what you're seeing on the right is the mobile platform, which is, I'm sure, what the majority of you are looking at. I'm going to go to a real world example on the on-screen platform or the web platform, but this is the mobile app. So it's very simple and intuitive. So let's say you're looking at micro Bitcoin. You got the current price on there. You got the number of contracts here. In this particular, again, fictional example, it's 80. And let's say that you want to buy a market order, okay? You go to the risk management tab, you enable the stop loss option here, and then you put your stop loss dollar amount in the bottom. So this is really, really good for scalpers, by the way, and those who are super active during the course of a day. Because you can just say, okay, this particular buy, I'm going to do this buy, and I don't want to lose more than $500. Bitcoin moves quickly, so it's a really good example. And you just plus, minus, or highlight this and type it in on your phone as to what the dollar amount you're willing to lose is. Remember, that's really what you're doing with a stop. You're not in a single trade in theory, I hope none of you are doing this, say, I'm going to risk my whole account. You're saying, okay, on this particular trade, I feel like $520 is enough. And then you go ahead and place the order, and you'll go into the order book and notice that your stop is automatically placed. It's really, really a beautiful, beautiful function in this particular platform. Same thing on the take profit. Let's say we're looking at micro gold. Amount of contracts for this particular this particular fictional trader is 144. You can see the last price up here. Here's the contract month, required margin, which was on the other screen as well. And then you go to the market on this particular order and you enable the take profits setting. Now you notice there's a trailing stop setting here too. We're not going to talk about that today because I'll just bore you guys with the different types of orders. We're going to do an entire other webinar on the value of trailing stops. There's also a couple of other stop orders that you can use on this platform. We're just talking about take profit and stop loss in this particular webinar. So let's say your profit, you say, okay, I think based on my process or based on the chart that I have available to me a potential target of $1,000. Type it in here or hit the plus or hit the minus, send the order, and not only will your buy market order go in, but your take profit order will go in as well. You don't have to worry about setting it up on the screen. I really, this is super intuitive. You've got the percentage equivalence as well. I wanted to point that out. So it tells you when you place this down here, you can see the price difference and then the profit percentage. Now that's a percentage that the asset needs to move. It's not the profit you're going to make because obviously Plus500 doesn't know what your total risk capital available is. So the app cannot calculate what you're going to make as a percentage of your risk capital. This is the percent move needed in the actual asset. So that's something that's important to note. And again, this automatically secures your gains when the market hits your target. I mean, it couldn't be easier than that. You don't have to do the calculation in dollars, or really you don't even have to do it in percentages. If you work on percentages as I do, you can just convert the percentage to dollars and put it in here as dollars as well. So it's a very easy system to work with. So why are they essential? Stop loss and take profit. Well, first of all, the preservation of capital is the most important thing in staying alive as a trader. You've all heard live to fight another day. That's one of those trading cliches. I don't really use that. What I use is the cliche that I made up, which is the best way to be a trader over the long term is to trade for a long time. And you could just use a simple example of how important preservation of capital is. We all know making 100% return is difficult. So if I have $100 in my pocket, it's two $50 bills, and I walk down the street and I lose 50, falls out of my pocket, gust of wind takes it, I can't find it. Now I need to generate 100% return on my $50 to get back to the original level I was on, right? 100% return is really hard to do. So preservation of capital, especially if it's in a single catastrophic loss, it's really bad, for lack of a better way to say that. I've seen traders out there saying that professional traders don't use stop losses. That's fiction. That is absolutely fiction. Do giant hedge funds use stop losses? Well, some may, some may not. But in terms of professional traders, if you're trading real money, you're a professional trader. If you're trading for money to pay your bills with, you're a professional trader. I'm in that position. I use stop losses. It enhances your discipline. It ensures your trades align with your risk tolerance. Something that I know is in this presentation, but I'm going to say it now. You're never thinking clearly about a trade except before you're in that trade. That's the only time you're thinking clearly about a trade. So your risk tolerance, your process, all of that, you have to have that all figured out before you hit the buy or the sell button. Because if you don't, your psychology, your day-to-day machinations in your brain, it'll get to you. And this is one of the ways to prevent doing it. Place the order with your take profit and or your stop loss, or just your stop loss at least inside the trading, the Plus500 trading platform. Never stop loss. Stop loss strategies can be layered, but a key rule is to never adjust risk once you're in the trade, unless it's pre-planned before adjusting the trade. What do I mean by that? I mean that you can layer entries or you can layer stop losses, but you cannot decide to do that before while you're in the trade. You have to decide before you're in the trade. Otherwise, you're likely to adjust it during the trade. And again, during the trade, you're not thinking clearly. So why are they essential? Again, real world impact. Traders who use stop losses and take profits trade more consistently and steadily grow their profits. There are actually studies done on this. Okay, and I'm telling you that part of the reason is the more you get stopped out and the more you take profits, the more you're out of the markets, avoiding unusually volatile situations. So you have to remember this, that if you're in the market and you're sitting there staring at the screen and thinking, I'll just do my stop manually, you won't, not 100% of the time. Again, 31 years I've been doing this. You just won't do it. By the way, I use stops, and when I don't, I still make that mistake on occasion. Maximize returns, take profits, ensure you don't miss opportunities during market spikes. I actually had that happen to me personally on the last gold spike to new highs. I had an offer in there, it spiked, and it only recently got back to those levels after about a 2 or 3 week break. Now, would I have gotten that level if I hadn't had the limit in? Of course not, because it would have collapsed and my trailing stop would have been hit, which again, we're going to cover in another webinar here. So let's look at some practical tips for using stop loss and take profit orders. And let's start with the stop loss orders first. Don't set it too close to your entry price to avoid premature triggers. In my particular strategy, almost always when I enter a trade, it goes against me immediately. That's just the way my process works. I don't worry about it. It's been researched. I just deal with it. But if I have my stop too close, I'm going to get stopped out of almost every trade before the process actually ends up working. Work on a process to discover good stop levels. The volatility of the underlying asset is a good place to start. What do I mean by the volatility of the underlying asset? Price differences. Okay, for example, crude oil and Bitcoin have much wider day-to-day ranges than the 10-year note does, for example. So look at the underlying volatility of the asset, of the underlying asset, and say, okay, my stop in this particular product probably needs to be farther away, and in this one, it can be a little bit tighter. Use a percentage of risk capital based on your trading strategy. That's almost another separate webinar. But essentially, when you're looking at dollar amounts, you want to predetermine a percentage of risk capital that you're comfortable taking and then convert that into dollars to use this particular stop loss feature I just showed you. A significant component in stop placement is position size, also almost a part of an entirely separate webinar. But when you're involved in something like the 10-year note futures, you're probably going to use a slightly different position size than you would in crude oil futures because of the volatility of the underlying assets. So that's something you want to teach yourself over time as well. Now, take profit. Choose realistic profit levels based on market conditions. Measured move targets are good to learn. One of the places you can look for measured move targets, Fibonacci retracements or extensions. That is available in the Plus500 platform. I'll show you where to find it when we go to the platform. Another one is use technical indicators to identify target price levels. I also say to use that for stops. But remember, a stop level is a level that you don't want the price action to hit. A take profit level or a target level is an area you do want the market to hit. So try to make your stop a hard level, right? Several different layers of simple support and resistance, for example, and make your target price an easy level, just short of an all-time high, for example, or just short of the previous day's high. You want target levels to be hit. You want to take profits and be out of trades and then sit back and wait for your next setup. That's also pretty good for your psychology, by the way. So let's look at a real quick case study. And I don't even know if calling this a case study is fair, but I'm going to go ahead and call it that. All right, let's look at the Plus500 app. Got it. All right, so this is the web app. I already showed you that it's the same on the phone app that you guys are probably mostly using. And you can see I'm in gold right here. I'm going to go ahead and expand the chart for a minute and just show you guys something. I have some things already on this chart. This may not be the way that you guys want to look at it, but it is the way that I look at things. So you can see that gold over the last couple of days on the future side made new all-time highs, right? This, for me, was the breakout level, okay? I have a simple trend line drawn here, and we've got a close above the trend line, which I always look for closes, but I'm a little bit longer term, okay? And you can see we had a next one go above, and this is what I call the defining point of the trend line. We broke above that, fell below it the next day, and then closed above it again. So let's say that I want to buy a pullback to the breakout level, okay? Now, I am not recommending this trade. I need to throw that out there. But I need to look at something on a day-to-day basis in order to show you these actual situations. So let's see what about the breakout level for me remains this trend line. So it looks like it's about 2705, okay? So I'm going to click on the micro gold here and pull up a trade ticket, all right? Trading ends at 5, so I got to hurry up with this. Let's say that I want to buy it, and let's say that I want to put in an order at about 2705. So I'm going to go to limit order here, all right? And I'm going to put in 2705, okay? Now, I'm going to go ahead and activate the stop loss and the take profit, okay? Now, let's say that I think based off of this particular trade, I can make $500, all right? Now, I'm sorry, that's my stop. So I want to be more comfortable with this. That's too much. $250. And let's say that I think I can make 500. I can type both of these in here, and then I can just hit place buy order. All right. Now, orders successfully placed for micro gold. I can go to my order tab here. Okay. And you could see that my order is in here. Now, if and when this gets elected, okay, my stop and my take profit will be automatically put in. Now, let's say that I wanted to do a market order. Okay. Let's go back here. Let's go back to micro gold, which I've got here. I'm going to click on this again. Now, let's say that I wanted to buy in a micro gold. Okay. Say that I just want to do a market order. All right. And let's say they have the same criterion here. I'm going to do a $250 stop, and I'm going to activate the take profit as well, and I'm going to put in a $500. Whoop, that's 5,000. That would be a little crazy. All right, I've got sufficient funds. You could see it. I need a profit move of 0.4%, a 0.04, I'm sorry. The loss is going to be 0.88%, the price difference, right? There you go, 176% and 50. You got to click outside of the box for these things to register. Now I'm going to go ahead and place the order, okay? Now I got filled here at 2008.49.30, all right, for one contract. Now I can go to my order book and you can see my stop and my take profit are here. I don't have to worry about it. It's all set for me. I don't have to adjust it. I don't have to do anything. It's all set for me. This is the beauty and the simplicity of this particular function on this particular platform. And again, because this platform was built for you guys, okay, and not built for professional traders and then retrofitted, okay, I'm not built for institutional traders and then retrofitted. You can see I'm making money already. I'm just so great at this. I'm kidding, obviously. This was just an example trade. This was built for retail traders. It was not built for institutions and then retrofit, Okay. So that's one of the beautiful things I like about this. This is so simple to do, is that now I can place my trade and I can go to dinner, or I can go to the gym, or I can go for a run, or whatever it is I want to do. Um, it couldn't be easier. And you also remember, in terms of being built for retail traders, you get unlimited demo trades and live prices. These are live prices we're seeing here. All right. Live prices from the futures market. They're not delayed by 15 minutes. And because of that, you can get actual solid measurements and testing of your own strategy. So anyway, I hope you guys enjoyed this. This is really all I wanted to cover. I think I'm going to go ahead and cover my trade at a $9 profit. So I can go to positions and, well, I'm going to go to here, close it out. All right, I've closed out my trade. And now, by the way, you also notice in orders, I don't have any working orders. Okay, so I took profits and my stop and my limit are also canceled. My stop and my take profit, I should say, are also canceled. So that's what I wanted to talk to you guys about today. I hope I can get through to you guys in a very positive way. The stop losses are not negative events, they're just events. Okay, it's basically the complementary probability to winning trades or losing trades. And you can't have one without the other. So if you can get it into your mind that a stop loss is part of your process, as opposed to a negative thing you want to completely avoid. I've been doing this 31 years and I've never met a trader nor known a fund that was open to the public that has 100% gains. Even some of the high frequency trading you hear about, they're not 100%. They're in very high percentages, but they're not 100%. And those are not us. I'm going to say thanks for watching. And I really, really appreciate you guys being here and staying in here as long as you did. This stuff is extremely important. And remember, the past performance is not indicative of future results. Futures carry a lot of risk, so you need to understand what that risk is before you start placing larger and larger trades, or any trades for that matter. And again, all of this is my opinion, not Plus500's. Thank you guys for being here. Cheers, everybody, and I will see you in the next one.